Alrighty, Wednesday, May 1st, first trading day of the month. We get some great volatility today with FOMC. Let's go ahead and break down the current market structure, starting off with ES. So we come into today's session wanting to see how price is going to respond versus this 50-50 downside level of interest on ES. Now, to recap, what we had on Tuesday was essentially a near-term structure right through here, 51.20 through that 51.50 area. Price triggers the breakdown right through here, kind of late morning, mid-morning. Tuesday rolls over, no real bid versus 5100, no bid at all versus 5080. Marks a bottom right here. That is essentially the close, and then you could see that open right through there trades a bit higher. Now, price just kind of oscillates here all morning through that 50-50, builds out a little bit of an intraday base, and then into FOMC, we get that push higher up into essentially 5100, that 5120 upside level of interest, which remember, that was the breakdown point from yesterday. So that 5120 definitely remains a significant level. We could see the sellers stepping in versus that 5120 again. The other notable thing about today's low in the current structure, just looking at the structure right here, is that this is the value area low of the current structure. So this can usually be at the very least, a decent reference point, from time to time a more significant level depending on the actual time frame that you're looking at and then the structure at play. Now, this aligned pretty nicely with that level of interest that we had, so it can add confluence to any type of level that you're currently watching. So value area low holds, that 50-50 area holds, price trades higher into the 5120. This continues to be a near-term range, right? Price is just trading sideways here. We do have some days with definitely some great volatility, some big volatility, but as far as what the current structure shows, it's just a range. This is just a range. So as far as tomorrow, I'll primarily be looking at, I had initially written up 5120, but we are now starting to see that selling into the close today. So depending on where we open, it definitely could be an active overnight session, but I'll most likely be looking at this 5080 level of interest here or this 50-50 downside level of interest. Now, keep in mind, this area right through here is still going to be considered mid-range, right? As we know, the best opportunities are always near the edges, either the upside or downside edges of the current range. That the best opportunities are near those kind of larger pivot points where price has offered a more substantial move. So anytime we're trading in the middle of a range, I am definitely more cautious, wanting to see how those higher time frame structures build out on the 15 and 30 minute charts before initiating any type of intraday trade. And again, depending on the overnight action, what we have overnight, that will be the approach for tomorrow. So ES going to be looking at either 50-80 or that downside 50-50 again here on ES. Now let's jump over to NQ. It's going to be pretty similar. If this chart would load. So like we talked about on ES, NQ we wanted to see again, very similar how that prior day low, how that 17,500 area is going to be treated. So you do get that drift lower during that overnight session, a little bit of drift during the regular trading hour session as well into that 17,400 level of interest. NQ definitely a little bit weaker intraday today versus ES. Always worthwhile taking note of those divergences and treating ES and NQ as independent entities, definitely. So trade whichever one has the better structure, whichever one makes more sense to you, or whichever one is actually offering the intraday setup for the strategy that you trade. They won't always perfectly mirror each other, even though we will see similar structures kind of build out on the higher time frames. On those lower time frames, you will definitely have some differences, which is worth taking note of. Now on NQ, we come into the sesh again, wanting to see how this zone is pretty much going to be treated. One of the main things I had mentioned this morning was looking to assess and really get a sense of our buyers stepping in versus this prior day low versus this 17,500 area and defending this kind of mid-range reference point or not. Pretty early in the session, we were able to determine that no, they were not. No real bounce up through that 17,500. In fact, it was holding as resistance. And then again, sellers in control. They push price into 17,400, right? Now look, again, near-term structure, we do have value area low right through here. 17,400 was a downside level of interest. Coming into FOMC, we get that bounce back into yesterday's breakdown point. So here was that kind of 2-day structure. There where you're looking at right through here, 17,950 by 17,800. That breaks down. Late morning Tuesday, we get that rollover into that 17,525 area. So where are we? Well, price bounce, retest that breakdown point, and now look at the selling here into the close. So pretty much negating the entirety of that FOMC move for the most part, right back into the prior session high from today, prior to FOMC. Let's take a look at the intraday action. So yeah, right back here into that 17,525 area, right through here. So this will serve as a solid reference point for tomorrow. Again, as far as the location, when I say location, I'm just talking about where is price in relation to the current structure. So we know the current structure, sideways range, right? And price is right here. So location is within the middle of the range. So we'll still have reference points and everything and levels of interest that we can pull from the middle of the range. But as far as having a very strong bias when price is trading in the middle of the range, definitely not. Definitely not, right? As always, best opportunities are near the edges of the range because you can expect a much larger directional move in those areas. So 17,525 main level of interest here on NQ into tomorrow, again, depending on how active the overnight session is. Overall, some really solid action for today. Hope you guys had a profitable day, or at the very least stayed cash. Definitely, like I mentioned this morning, FOMC day can offer some more challenging setups simply because your risk ranges are so much wider, right? You have much wider risk points. So if you're not dropping size, if you're not aware of those wider risk points, you really set yourself up to be in some trouble. So again, hope it was profitable. Hope you didn't do any damage. Feel free to shoot me a DM if you have questions about any of this in the Traders Think Tank. Otherwise, I'll see you guys tomorrow morning for the pre-market prep live stream. Have a great afternoon.